Hello, everybody. Thank you for having me. I'm Tariq. I've been insuring the archaeology and heritage sector since 1998. Seems a very long time ago. I remember my first meeting with Pete Hinton and him telling me all about archaeology, and I was fascinated from day one. It has given me a fairly unique insight into the sector from a risk management and heritage insurance perspective as to how and what risks are faced by the sector. So I thought it would be a good idea for me to come and speak here about contract risk management, which is an area that your insurance doesn't protect you. It's an area everyone needs to be aware of. You are mostly aware of it, but it's kind of a good idea to remind you and give you some ideas about some of the things that I've seen in my 27 years of looking after the sector in terms of where the risks are, what you need to be aware of, and empower you to make sure it doesn't adversely impact the business. So, is this working? There we go. So why should you manage your risks? Well, there are some very obvious reasons for managing your risks. Contract risk is definitely there, and it directly impacts a business's financial stability, its legal standing, and its overall reputation in so many ways. Why? Well, avoiding losses, avoiding unmanaged contract risks, because they can lead to financial losses due to breaches of contract. What I see more often than not is large organizations that you work for are cascading their risks down. They are trying to mitigate their own risks, and so they cascade it down the chain. And it ends up with archaeologists, with all other contractors who work for the big developers, for people the likes of HS2, or people like the energy companies like EDF or whatever. And they have solicitors advising them to transfer their risk as far away as possible. So it's then down to you to push back and say, actually, we're not going to take this because this makes our position very difficult if things go wrong. So really, everybody here needs to be reading their contract conditions. And if you see anything in there that you think, oh, I'm not sure about this, I don't understand this, get advice. Speak to me, speak to your legal advisors, speak to your contract advisors, and make sure that you're pushing back on anything that forms contract risk. A few little things to look out for. I'm sure you've come across collateral warranties, which I've put there with a bit of a sort of football analogy, sorry, but it kind of makes it a little bit easier to understand what these things actually are. But collateral warranties and third-party rights agreements do pretty much the same thing. They basically transfer the right of somebody suing you to somebody else. Now, collateral warranties and third-party rights agreement create contractual risk that you're not insured for, or for the most part. So you have to be really careful that if you do see those terms, not to agree to them. Same with novations and assignments. Novations, again, create a new contract with a new party replacing the old one. Novations and assignments are not as bad as collateral warranties or third-party rights agreements. They are more acceptable, but you just still need to be aware of the wording of them, that they don't create any form of contractual risk. This is something we always talk about. Most people have their own standard terms and conditions. If you can operate under them, great. If you can't, you operate under the main contractor's terms and conditions. Now, the bit about contract risk, and the reason that we're talking about it, is because it's excluded from professional indemnity. Now, professional indemnity will cover common law and statute, but it won't cover contractual risk. So contractual risk is where there are wordings in there that create situations where you could be sued under contract, but you wouldn't have been able to be sued if they weren't in the contract. And that is excluded under professional indemnity insurance. So it's important that you read and check your contract conditions. And you can be bound in, not just in a contract, but also at tender stage or within framework agreements. And then you have contracts within framework agreements that make it even more complicated. Important to check those. Always check your contracts to make sure that the law and jurisdiction is in line with your insurers, because most insurance policies will say that your jurisdiction as in the courts that that you can be defended under, have to be UK. So just check your contract conditions on that side. Disclaimers, obviously, worth putting in your documentation and your contracts. Yes, we've done everything that we can within these limitations, but caveat it. Letters of reliance. Come across these an awful lot. If you get asked to sign somebody else's letter of reliance, what would you look for? You'd look for contract risk within it. But letter of reliance in itself can create contract risk if the wording creates any further contractual risk past the original contract that you signed. So check the wording of the letter of reliance, and it's better off to have your own standard template that you say, when somebody says, I want you to sign a letter of reliance, say, please, here's our template, we'll agree to sign this one on, but we don't want to sign your contractual letter of reliance, just in case there's anything in there. Performance standards, skill and care. So this is something that I see a lot in contracts where they say you will take all due skill, care, diligence, and prudence in the performance of your duties under this contract. If you've seen that phrase, and I'm sure some of you have, I see some people nodding, yes, we've seen that, take the word all out, because you can never take all due skill and care. So it's a simple little thing, but that simple word all creates contractual liability, which is not covered. So again, it's reading those contracts. Remediation and penalty clawbacks. Well, anyone who's been involved in a HS2 contract or any of the larger infrastructure projects, probably very aware of these. Try and push them back if you can. If things go wrong, they just try and cascade everything down. And it's being very aware of where your exposures are and whether or not it's worth taking on those additional risks. Hold harmless agreements. In essence, what do hold harmless agreements do? Hold harmless agreement basically says you can't sue us if things go wrong. You see them often. You also see indemnity clauses in there where they say you will indemnify us if this happens or if that happens. Again, read the wording very carefully. Sometimes it's to do with a breach of the Bribery Act or something like that, and that's okay. But if it's in anything else, you need to be very aware of it. Okay, so insurance is a risk transfer mechanism, right? When you're managing your risks, some you accept, some you reject, and some you transfer. Those that you accept, you treat. Contract risk is the treating part of it. Insurance is the one where you transfer, but contract risk cannot be transferred. So if you are taking on liability under contract, just be aware the professional indemnity will usually exclude anything to do with that. And that's every professional indemnity policy. Deeds. Now, I see this a lot nowadays. It used to be that contracts came executed as a contract and you signed it as a contract. Sometimes they would say in there, you need to maintain professional indemnity for 12 years. Well, you don't. Statute of limitations actually stops that at 6 years. But now solicitors have cottoned onto that. So now contracts are often coming through executed as a deed. And if you see it executed as a deed, that means that your liability is exceeded the statute of limitations and is now 12 years under that contract from the end of the contract. So you are liable for 12 years after the end of that contract for anything that you signed. The other complication by signing it as a deed means that even if they don't pay you, you're still liable. Yes. Because deeds do not need a financial payment in order to be enforceable. Who knew? You often see unreasonable insurance requirements within your contracts. If you do see them, push back. And if they say, oh no, we need you to maintain 25 million professional indemnity for the next 12 years, say, okay, well, I will pass the cost back to you then. Ask your insurance broker how much it's going to cost for the next 12 years to buy that level of cover, add 10% onto it and pass it back. They soon change their requirements. Obviously, those are the additional costs that you then build it in. So again, if you've signed something as a deed for 12 years, you also have to think that, well, if in 5 years the business closes, you are still responsible for that period of having professional indemnity insurance after the business is closed. So important to bear these in mind. when you're pricing your contracts, when you're reading your contract wordings and making decisions about what risks you accept and what risks you reject. And always seek legal advice on contract risk. Now, I'm happy to look at contracts that come to my clients. They send them to me often. I take a look and I point out the bits that I feel need to be looked at. And that's absolutely fine. I'm always happy to do that. It's a free service. But you should always seek legal advice on contract risk and make sure that you are fully aware, eyes wide open, of what you're signing. I personally think that contract risk is one of the largest areas of exposure to the archaeology sector at the moment, especially as the contracts are becoming more and more onerous and they are trying to cascade all their risks down. So it's just be really, really aware of it. And yes, Carillion is a well-known example of contract risk killing a large organization. Liverpool Hospital and Aberdeen Bypass were contracts that were ring-fenced on price and they overran by 800 million. There were various other factors that caused it, but that took Carillion out and 5,000 other companies alongside it that were reliant on Carillion for their business. ISG is a similar story, but it's not one that's fully available in the open domain yet, so I can't really talk about it, but it can happen, and it has happened, so just be aware of it. These are a few examples. So duty of care, you use all due skill, care, diligence, and prudence in the performance of your duties. Remove diligence, remove prudence, and just say, yes, we will use all due skill and care in the performance of our duties. Push back. They accept that, but they try it on. I've yet had anyone push back on that one. The companies will accept as soon as you say, yeah, remove that, change that to that. Usually they're fine with it. Collateral warranties, they're not automatically covered by professional indemnity insurance. If you sign a collateral warranty, be aware you're taking the risk on yourself if anything arises from that. Some insurers will accept if they've been referred and they understand them and they've accepted the wording on them, then that's okay. But mostly they just say no. So if you sign a collateral warranty without referring it to your insurers first, be aware any claims coming under that would not be automatically picked up by your professional indemnity. It's better off to accept an novation assignment or a letter of reliance instead, if you can possibly push back on collateral warranties. Very often you see them coming in, being demanded at contract stage or even at framework stage, that they say you will be agreed to 2 or 3 letters of reliance or 2 or 3 collateral warranties, and they don't give you the option. If you read those contracts very carefully, you'll often see they're very biased towards the main contractor and not towards yourself. So it's trying to make it more equitable for you. Assignments, yeah, okay, it's a standard wording, but just be careful that they don't assign it to a company that's on the financial sanctions register. So I like to say, if you can possibly say, let's just see who you're assigning it to before I agree to an assignment. Hold harmless agreements, yeah, you really need to try and push those away, because a hold harmless agreement would maybe prevent your insurer from recovering costs, and they might be really disappointed at that. Yes, obviously, we've already talked about the periods of insurance. I'm whizzing through this quite quickly, as you can tell. I left that one in there, see if we've got some time to talk about cyber and crime, but it's something to be very aware of. Nowadays, we're seeing more and more cyber attacks against heritage organizations, so just be super aware of it. Manage your risks on that side. Now, plant hire contracts. This is a really interesting one, something I'm very passionate about, actually, because having a good system of checks. CPA. So I'm sure you all know CPA, Construction Plant Association, and their standard hire conditions, which are absolutely fine. If you can use CPA at all times under your plant hire contracts, please do. Try and avoid any companies that use HAE, which is Hire Association Europe, or bespoke hire conditions, as they can create more contractual risk for you, where you may end up picking up costs that you hadn't budgeted for, because your insurance may not cover it. The reason being, crucially, CPA allows for deduction of fair wear and tear. HAE does not. HAE insists on new for old replacement. Now, your insurance policy may say we will only pay claims as long as it's equivalent to CPA, and we will treat all claims as if they're under CPA. That means if you hire a 20-year-old digger on a site that's worth maybe £3,000-4,000 after its depreciation, that gets torched, they might ask you to pay £250,000 to replace it, but your insurance will only cover you for that £5,000-6,000. So it's making sure that your policy wording that you've got is appropriate and will cover any hire conditions, or if not, just hire under CPA, and it's easier. The other problem with having new for old replacement is aggregation and accumulation. If you have a large site with a large number of plant, that figure can very quickly mount up to a very large claim if you've got 5-6 items of plant damaged. You may have a welfare unit, a couple of 360 excavators, a couple of dumper trucks, maybe some porter cabins, some trackage, fuel bowsers. They come along, some kids decide to break in and trash the whole thing. What have you got? £1 million of damage? Cover for less than that, then you end up having to fork out the difference. So it's just, again, being aware of that. Make sure that if you are borrowing any equipment, or if it's on free loan from university or something, mostly to do with societies, but if that does happen, then check that your policy does cover it. There are sometimes site security conditions, so being aware of those in advance is really useful. Also, continuing hire charges. Most proper plant insurance policies will pick up continuing hire charges, but again, be aware that they can ramp up. If you back to the early example, if you've got a site with 6-7 items of plant damaged, the continuing hire charges on a day rate can really ramp up very quickly. And some policies will only cover maybe £25,000 worth of continuing hire charges. Some don't have an inner limit. So it's, again, being aware of that. Plant operators, under the CPA and, in fact, all these hire conditions, the plant operators are your responsibility. They're your employees for the day. Any damage they may cause or any injury that occurs to them, your responsibility. This is a good one. When does liability finish? So under most of the hire conditions, your liability finishes towards that item of plant when it's actually on the low loader being transported back. Some conditions actually say it's your responsibility when it leaves our depot if our operators are not in control of it. So if a third party picks up that digger and brings it over, it's your responsibility from the point it leaves the depot. And that's the new CPA rules that have come into force recently in 2021. So here's the next question. When that plant is delivered to a site, very often it is delivered on the road. And if it is delivered on the road, then you've got road risks exposure there, because that plant is being delivered on a public road, in a public car park. If that plant crashes with another vehicle or with a pedestrian or anyone else, that's only covered by your fleet insurance, not by your plant hire insurance. So make sure that your fleet insurance has got an extension applied to it that covers road traffic act cover for plant. Very important. We had an incident where somebody had off-hired their plant, and the plant operator was driving it up the ramp. Went a little bit enthusiastically, shall we say, and he missed the ramp, and the digger fell off into the road, into the oncoming traffic. The operator wasn't wearing a seatbelt and was flung through the smashed window, rolled across the road, ended up on the other side in a ditch. If some oncoming vehicles had crashed with that, or if it had landed on an oncoming vehicle or a vehicle traveling past, you can imagine where that risk would have lied. So that's why it's important to have that extension on your fleet policy. Also, if you're off-hiring a digger and the guy says, well, I'm gonna, this is a live example, by the way, some of you might be recognizing that particular image. But if you've off-hired it and say, okay, I'm off, thank you very much, yeah, we're going to carry on with the archaeology, we don't need you. And the guy takes a shortcut across the fields where it's been raining recently, that can then drown. So, yeah, that was £130,000 of digger. But they'd off-hired it. It's not our responsibility. It still is until it's off the site on the low loader. So you have a little bit of traffic management responsibility to make sure that you get that on the low loader safely before your responsibility finishes. Define the boundaries and the Road Traffic Act cover. Hopefully that's given you a bit of insight into contract risk and where it can come in and how it can come in, how it can affect you. So I've left a little bit of time if anyone has any questions. But yeah, that was it. I kept it nice and short, but hopefully punchy.